markets at noon on ET Now with me, Kanishka Sarkar and Srishti Sharma. Here's your midday check-in on all that the market has been doing. We're tracking all the action on Dalal Street. Well, Srishti, almost flat at this point. Nifty still in the red, but holding above the 24,900 mark.
Well, yes, Kanishka, what a great day coming in for the benchmark indices, and what a stellar recovery actually from the day's lowest point, because for Nifty as well as Bank Nifty, we have not just seen the recovery, but a lot of sectors have actually participated in this recovery. Case in point being select paid counters, select financials and chemicals. They are holding up to the shade of green as well. But the key question is, where are we headed from here on? And this particular week is also a very crucial one, because this is the monthly expiry week for the benchmark indices. So before that, what sort of a data is building up into the system? Let's try to decode that with Ajit Mishra, who is joining us from Religare Broking. Hi Ajit, great to be speaking with you. Firstly, what do you make of this strong rebound on an intraday basis? And for the second half, do you believe that we are in to build on to some bit of more gains?
Hi, good afternoon. So yes, it seems like a roller coaster ride, since morning that the initial tone was negative. We've drifted lower. We've reached 24,800 mark, the critical support area. But in no time, we witnessed a very sharp recovery. So it seems like that the bulls are not in a mood to lose their control anytime soon. Means after testing the crucial support of 20 MA last week, since then we have been seeing that we are gradually inching higher and trying to surpass the immediate hurdle at 25,100 mark. But as we have the derivative expiry scheduled, 25,000 still is a zone where the call writers are still very active, and we have the highest OI so far. So it seems like that consolidation might continue, at least in the index, for a day or two. But the way we are seeing banking, financials, and other sectors performing with, probably in next couple of sessions we might see a breakout also of a 25,200 mark. So as of now, it's a buy on dips market with focus more on stocks until we decisively cross this 25,200 barrier in Nifty.
Hi Ajit, this is Kanishka also joining in. Like you said, it is a buy on dips market, but I want to specifically get your view on some of the power names like Coal India, Power Grid, NTPC. They have sort of been seeing pressure today on the back of the demand dip that we saw in power on the back of early monsoon that we are seeing. So what are the levels that you think we should be tracking for names like Coal India, NTPC and Power Grid?
So yes, we are seeing a bit of a pressure. Means anyways, these stocks were not participating in a similar quantum to what we are seeing in the other sectors. So Coal India, especially, after almost 2.5 months of consolidation, is currently hovering around major averages. So until we sustain our 410 mark decisively, this sideways tone might continue. But comparatively, it's a better, stock among all three, because NTPC and Power Grid, they are struggling below their major averages. So that is not a good sign. So probably we can continue to see pressure of underperformance in NTPC. So closer to around 330, 325 is something that the stock might test. That holds true for NTPC. And for Power Grid also, we are having a similar kind of a structure. So among all three names, Coal India is a comparatively better play.
Within financials, any particular stock that you wish to highlight? Because for today, when I see that ICICI, Axis, these large caps are seen to be taking a bit of a backseat, but the key underperformers, case in point being IndusInd Bank, RBL Bank, Bandhan Bank, they are actually bucking up the trend. Do you believe that one can actually take a trading view in any of these counters, or would you advise to stay away?
So yes, we are seeing stocks, especially from the banking and financial packs, who are sitting on the sidelines or witnessing underperformance, seeing some rebound or recovery. But still, I believe that one should continue with the top performing names or stocks which were sitting on the sidelines. So stock like SBI, wherein we have not seen much traction yet, means the stock has been consolidating in a very tight range for almost a week, 10 days. So here the risk reward is favorable, because it seems like a buying pivot formation with the current levels, and 820, 830 is something that the stock might attempt. So with stop at 780, SBI looks better for fresh longs.
Okay. Ajit, let's also discuss which are your top picks for the day. What are the levels that we are tracking for those?
Right. So SBI was one name wherein we see fresh traction and stability also, because we are seeing excessive volatility in the market. Apart from that, from the metal space, VDL, Vedanta is something that one can look at. See, metal, banking, financials, realty, these are sectors basically that one should be focusing on, alongside with the themes like defense and select PSUs. So for Vedanta, we are eyeing that after this consolidation range breakout today, 468, 470 is something that the stock might test. So with stop at 440, one can accumulate Vedanta at current levels.
So those are the two buy calls coming in from Ajit. But Ajit, so good to have you on the show today. Thank you so much for your time.
Thank you. Thank you.
All right, but